Good evening and welcome to Accendo Traders. This is our video trade plan for Wednesday, April 30th, 2008. AccendoTraders.com, effective trade plans delivered daily. All right, for our new people, go ahead and pause it right about now. And this is what we do for our aftermarket routine to prepare for the next day, to make sure that we're in the trades that we're supposed to and out of the trades that we're supposed to be out of. Obviously, the most important thing is for us to release and have a life. And as we talk about today's action, there's two things that are certainly going on here. First of all, you can say that maybe the market is still looking at things half empty. Remember, we're at key resistance levels, 1400 for the S&P 500, about 2440 for the NASDAQ. The Dow's above resistance, but certainly it's establishing new resistance because we haven't moved higher. But I think we all understand that the market is in hold, it's in pause until tomorrow's FOMC policy statement. Certainly, they're expecting a rate cut that's just going to crush the dollar. We'll see what happens there. But I think the market is just waiting to see what's going to happen with the policy statement tomorrow. And you can see tomorrow we've got a lot of economic data. Look at all that data. But again, the most important thing probably going to drive the market is going to be the policy statement. Now, crude oil may move in the morning. Some of these other things may move the market initially in the morning. But you're going to see a consolidation, a kind of sideways move as we wait for the 2 o'clock release of the policy statement. You can also see tomorrow we've got CMI. And, you know, CMI popped out of our consolidation and really, so it's probably made an earnings run. General Motors, Kellogg, NOV, we've been talking about NOV for the past week or so, AKM after the market close, Starbucks, and WGL Holdings. And then we still have our two split plays. So let's go ahead and look at our flag list from last night. Okay, as we begin to look at our flag list, or you two folks, you might want to take a look and see some of the things that I'm flagged. What I'm going to do is talk about the market real quick. I'm going to run real quick through the list and give some general statements and kind of come back and go a little bit more specific because of our time limit here. So with the NASDAQ, you can see we're consolidating still here, and we're still below the resistance level of about 2440, and just some sideways moves. Just a sideways move. We got a whole point today on the NASDAQ. The Dow Jones, same thing. Consolidating. Still above the 5. That's positive. Market still looking at things half full versus half empty. But again, we need a catalyst. What is going to project this market one way or the other? Here's the S&P 500 losing. We've lost 1400 now. We're back below it. So we need a catalyst, and possibly tomorrow with the FOMC policy statement could be our catalyst to move the market one way or the other. The traders are looking for probably a quarter cut. Certainly that can do damage to our dollar, and with a cut, we might want to go to our gold stocks. They'll probably rally on a cut, but we'll see how the market interprets what the FOMC board has to say about tomorrow during their statement. So here's Apple. We're still going to go bullish on this one. Again, I'm going to go quickly and then follow up. Still going to go bullish on this one. AEM, I'm going to hold off. Big push down, and like I said, I want to see how it reacts to the policy statement tomorrow. AKS still going to go bearish on this one, falling down to the 50 and our uptrend line. Amazon, I'm going to give this one more day. It's still holding on to being above the 200. I want to see it above the wicks. APA, one of our former favorites, but look at it. It's a falling 3 pattern sitting at the 20. If it breaks this 131 range, definitely want to catch it a fall down to the 50. And you can see this will probably be a great place to buy APA. Baidu, rising 3 pattern, great. You can see that it closed over here with this gap down back over here in January. So that's fine. That's a resistance level. Let's put an alert above that high. CHK, another one that's falling for us. I'm going to wait to see what happens when it gets down here to the 20, see if we can catch another 20 to 50 run. You can see that's my theme. CLF is one that's still above the 10, so it's still strong. Remember, we have a catalyst for CLF. It's our 2-for-1 split play. So I'm going to you still recommend that we bracket this one above 166, and you have an aggressive put play below 157.50. COP, very nice, still at our resistance level here. Put an alert at today's high, continue to go bearish. Dry shipping, I'm just going to pause on this one, so I unflagged it. Goldman Sachs, remember this one's sitting close to the 200. We thought we were going to get a run to the 200. Still a couple dollars away, but tighten up your stops. I still think we have an entry tomorrow to the upside. Joy G has a tendency to go, so I unflagged it, and we'll see. We'll see. We got better trades. MOS, pot had a target downgrade today. It was in a downgrade section. I'm a little concerned about this move and how close we are to the 50. You can see the 50 tends to be a good place to buy this one. So I'm going to unflag MOS because I want to wait and see what it does here at the 50. See if it bounces, see if it falls. Noble Drilling, you see we broke this wedge to the downside. I'm going to wait though, still going to wait. You can see it kind of bounced off these wicks here. So I'm going to wait for, see if it breaks the 20, put an alert at 55 and see if we can break that 20 moving average. PCU, look at this move. Look at this move. Wow. Came all the way down here to, and either PCU or pot, which one of those was downgraded today? But you can see we got a nice support here at 111. So I'm going to put an alert here. If it breaks the 50, we could probably fall all the way down to 100. So this one I'll definitely like for a put play. Pot, also a little concerned about how far it moved, but this one we still have a good $5 or so, even more than that before we get to the 50. So I am going to put an alert at today's low on pot. Sears Holding, rebate check play, retail's doing okay. I put my alert around 102, 103, catch a continued move. Remember, this is our rectangle. So if this one could continue to move, let's let it do it. And the final one is WLT, still an ascending wedge play, came right down here to the 20. Bracket traded still below the 20, right around $68. The low today, $67.75. Keep your alert up here, $74. Let's see if we can bounce on these plays. So you can see a lot of our former favorite stocks have failed us. Okay, what's important to go back and look at, as I'm going to just take a couple quick seconds here to look at a couple things, is as I go down, look at these indicators, and you're going to see for the most part, we're going to see a lot of our stocks here looking like they are topping out there. So again, the market is pausing right now. And as I go through these indicators and you look at it and see how they're angling down, the blue lines are crossing over the purple lines. And those are all bearish signals. So what we need is for the market to come out of that consolidation. Look at PCU sitting at the 200 here. And that's why, again, we need that catalyst to move us forward. Or, you know, the market is certainly looking like it's ready to pause. Look at Sears is one of the few stocks that looks like it's definitely ready, still bullish. Hopefully, maybe we can get a run all the way up to the top here and the 200. So, what I just want to point out again is that we need a catalyst, and let's see what the FOMC policy statement can do for us tomorrow. Okay, now we're ready to go into our educational portion of our video. And the last time we met, we were talking about the market just being data. The market is just ticks. It's just movement of ticks up and down. And the only way that we can put meaning upon that tick and upon that movement is by our background experiences. And that Mark Douglas talks about the faulty trending attitudes and perspectives, and that because of our past experience, both good and bad, and sometimes bad, we develop bad attitudes towards the market. The market is out to get us, and we lose trust and confidence. He goes on to say that he clearly cannot make a bigger statement or a bigger explanation to what is the difference between consistent traders and inconsistent traders, and it's that the best traders are not afraid of the market. The best traders do not look at the market as a place of fear. It does not bring them into a little ball sucking their thumb wondering, woe is the market maker. No, the best traders look at the market as just that, an opportunity, and they look at the possibilities that the market gives us every day, and they look at enacting upon those opportunities. Remember, our goal is you're not going to win on every trade. So therefore, knowing that, having the right attitude about that, the best traders look at each opportunity and know that their percentages are working in their favor, that they're going to continue to make money in the market. In addition, Mark Douglas goes on to say that 95% of the trading errors that we experience is because of our attitudes. We're worried about being wrong. We're worried about losing money. We're worried about missing out. We're worried about leaving too much money on the table. And again, those are faulty attitudes. We have to continue to develop our system as we work together as a group here and let our system work for us, and let our system tell us when to get in and when to get out, and not worried about the possible effects of what the market is or is not doing. So, as usual, if you want to download the full version, go ahead and get our podcast. Thanks for those people who are providing feedback. Continue to go over and check my blog. I'm really putting all of our stuff all about trade plans over there on the blog. Some of the articles that some friends and I have been working on. Part of the reason why I wasn't here yesterday. And as always, trade at your own risk.